We cracked hard on Friday. There's really no other way to say it. I think the issue is twofold, and we're going to go through what I think the issue is. This is going to be pretty in-depth, and I think that when you look at this and you look at the nuance, it'll explain a lot. But me pointing out the breadth of the market right now, I don't think it's worth our time. I think what's most important right now is to understand what sectors are going to move, where the canary in the coal mines are, because there's two of them. There's actually more, but there's two major ones, and they're starting to crack. But I do want to go through some key levels here that I think are super important. And we're just going to look at the S&P. If we take a look at where we are here, when we got done Liberation 1 and winning number 1, we came down to that April 8th, and then they paused all our Liberation and winning. And then you have a VWAP from there. You have never tested this VWAP, which is kind of odd. So that would get the SPX down to that 61.29 level. Number 2, from this breakout, if we take a look and we mark off that breakout, you have never, ever tested that breakout. That breakout coincides perfectly with this level. As always, subscribe to the channel, click all notifications. Please share this video. It's packed and there's a lot in here and it's very, very actionable. And I think people need to see a lot of the stuff that's in this because I think you need to be aware what the risks truly are. So if you take a look at this, that is for all intensive purposes, a black marbuzu, which is a really rare pattern. You do have the wick at the top. The open is usually the high, but that's just straight dumping all day long. And when we start going through what we're about to go through, you're going to understand why. But to me, this is our first line of defense. Now, if we do the simple things and drop in the 55, there's the 55. And I don't know that it even has to be, straight down. I don't know that we don't get some huge bounce over the weekend and some of these issues that are out there get resolved. I don't know that they don't get worse. If I was leaning on it one way or another, I'm at 50-50 whether it gets worse over the weekend or gets better over the weekend. But I do believe that the one thing that we have to note is that you are going to have massive volatility next week. And I think it's going to be massive. It's not going to be small. And there's a bunch of reasons for that we're going to get into today in a second here. But these are the basic things that I would look at. If I wanted to get a little more in depth, I would just look at the S&P and I would look at the RSI and how we have that negative divergence and how we cracked here. And this would make me concerned. And I'd want to see stabilization. I may drop this down to a 4-hour and look at how bad it really got. Now, once we're under there on the 4-hour and we start turning up, you usually see some kind of bounce. The problem is you don't know for how long that bounce is out there or when that's coming. So we really are going to have to watch that. But the first line of defense is going to be that 55. And from there, we'll go from there. There are one other thing that I think is important before we jump into it. This is the VIX. Now, does that VIX look like you've put in a bottom or does it look like it just woke up? And I think this is super important to get. If this is going to be worse, if this is going to be something that accentuates and becomes an issue for us. This was August with the Japanese yen carry trade. The VIX got to 64. We're at 21. That's if this is going to become a thing. Okay, this is April, which is starting to shape up like this. There's some similarities going on here right now. That was in the 60s. I'm at 21. So everybody needs to understand the implied volatility of this needs to kick up at least to a 3 handle, in my opinion, before you're even at that spot saying, did we bottom? The problem here is most people are not going to look at the issues that I'm about to explain to you in this video and think that it's just a normal day and you're just going to bounce again. But by watching this today, you're going to have a better understanding of what to do next week. It's extremely informative and it's extremely actionable if you pay attention to it. Some parts of it you're going to want to watch again. The other thing I want to bring in before we get into it and dive into this is VXN. Now, if we look at VXN as well, we can see this very, very clearly. And this is the NASDAQ 100 volatility. And we can see how this is acting. And that level of 40, that 4 handle really becomes an issue, what we have to focus on. But let's say that it's like a mini issue. Well, that really gets us to that 30 level if it's a mini issue and we're at 25. Both are suggesting that we have more pain. Now, before we get into the short term, let's do it this way and look at Move. What is happening with Move? Well, a lot of people don't know what Move is. So Move is the bond volatility estimate index. And what does that mean? And what does that mean to you? Well, that means that you're buying puts on bonds. You're buying insurance on bonds. And I just want to show you something in here. And everyone can kind of see this level right here, 23, 24. And that's really where you bottomed, kind of in that area, isn't it? And we're going to get to why September 24th was so important in a moment. But where I really want to go with this is just look at where you are from October 6th on the week. and how that week played out. So what did the bond volatility index move this week? Well, you moved up about 17%. Have you done that in the past? Yep, we have. We've done it. We've moved here and we've done that. And then it just kind of blew it off and it came back and it was no big deal. Is this going to be the same? Well, you're at a level that's really very low for move. And so they're going to go out there and they're going to buy some protection now. And that price of protection has gone up and people are concerned about their private credit and their bonds. And we're going to address that in great detail here. But it's important to get this before we go further. Finally, if we take a look at the VXX, the short term, we can see that short-term futures are spiking. Are they at anywhere near the level? On a short-term basis, you have to realize that they reset this. So you really don't want to go back more than 12 months to 18 months. If you look at where does that usually leave us? Well, that leaves us in a spot that you're nowhere near on the short-term side. Now, this is the way that I like to use it. I like to take the longer-term VIX and divide it by the shorter-term VIX. And what you're going to get is you're going to get a ratio. That ratio is going to show the comparison between how people are hedging long-term versus short-term. And that usually leads to some kind of spike. Now, if it's going to get worse, then you're really looking for that spike to get up to that level, which means VXX will outperform, right, the VIX. You got it. So what does that mean going forward? Well, this is telling us back here in December when we rolled over that we're already over that. What is troubling to me about this is that this ratio, which I look at it about once a month, is continuing to rise higher and higher. And I think that's very important for us to understand. What we're looking at here is you're just looking at a ratio that's telling us exactly when the relationship between long and short, right, is starting to accentuate. And I think this is very important. Let's get into it. Very quickly, if you're trying to get into the community and you are on the wait list, please look for a invitation this week. A bunch have gone out. If you want to, the wait list, the link will be in description, or it will also be pinned to comment. So what exactly happened yesterday? Super important to get this, and we're going to follow the timeline as to what was in the headlines and what I think people are missing. And I think the devil's in the details here, as it usually is. Trump threatens higher tariffs on China, citing restrictions on rare earth elements. All right, so they're getting it right. Something happened, and then he responded to it. Trump threatens massive tariff hike on China over rare earth disputes. Okay, that is the issue. So it wasn't just out of the blue. So let's talk about what he did. And then let's talk about why he did what he did. And let's talk about some of the ramifications on why this might be happening now and what other countries are at risk. And I think it's important to understand why this was done. It wasn't out of the blue. It doesn't matter what side of the aisle you're on. The important thing is to understand why this happened, because if we understand why it happened, then we know how to act on it. So it sells off as Trump hits China with more tariffs. All right, well, there's obviously more to the story, or is there? Wall Street slumped on Friday. Trump escalated his trade conflict with China by tightening rare earth restrictions. Okay, so it's not his trade conflict. China did something, and we're going to get into it. And it's not a little something that they did. And this is where people are missing it. There's something called de minimis, and we're going to get into this. Late Friday, Wall Street officials trading sessions, Trump said he would impose 100% tariff on imports in China, export controls, software. Now, why would I say the word software 3 times? I'm saying the word software 3 times because when this either alleviates or doesn't alleviate, what sector do you think is going to be affected by this? Software. So if this escalates, then we would short software. If this de-escalates, then we could use software as the proxy to go long. That's why I said it 3 times. So give me the details. All right, U.S. to impose 100% tariff, software export controls. No reason to meet Z in 3 weeks. That's very interesting why he's saying that. Rift between the 2 largest economies leaves market reeling. U.S. stocks most since April. Okay. It talks about NVIDIA, Tesla, Amazon. Obviously, they all came in. Why? Because of these restrictions, and we'll get to that. They added steep declines. There's more going on under the hood here that we're going to talk about. But I do think that it's important to understand that. President 2 weeks is planned, and there are many countermeasures under consideration. Latest move against China shocked markets, threatened further damage, already straining relationships. So I think it's important as to why this was done. It wasn't done out of the blue. It was done, actually, in my opinion, on a more concentrated effort globally. And I think it was done in partnership. And this is me speculating, but I think it was done in partnership with the EU, and I'll explain. For those that don't know, China produces 90% of all world's processing rare earths. That's why you're watching these names like MP, USAR, partnerships with TMQ because they know that this is happening. They're doing this on purpose, and they're trying to control their position by what they own. It's not like we wouldn't do it. It's not like the US wouldn't do it or another country wouldn't do it, but there's more behind the scenes here, I believe. And this is where it all started. It wasn't out of the blue. China introduces new rules of export control on rare earth and semiconductor items. Now, this document is extremely long, and I am not going to go through the entire document. I'm going to grab parts of it, but I put the front piece there so that you can go and Google that article if you like, and then go through it yourself and dig into it. But the notices introduces a catch-all rule for rare earths related to exports. Exporting operators shall apply for licensing. If you want to get something out of the country right now, apply for a license. Non-subject products, technologies, or services of operators known that items to be used or substantially conducive to related earth mining. So not only do we want you not taking any of the rare earths out, any of the earth mining equipment that we sell, now you need this specific license for, whether it's metal smelling, magnetic material manufacturing. You want to make magnets, now you need a license. We'll decide if you can get one or not. Rare earth secondary resource recycling, utilization outside China. Any of these tools, so I want to be real clear about this. It's not even just what's in their country. It's any of these tools that were then being sold out. They don't even want other countries now mining for what is in their own country. Really important to note these distinctions and how high this actually escalated. And there is a word that is put in here over and over again, and it's called de minimis. And what that means is even just a little bit of any rare earth material in anything, it could be like 0.1%, and all of a sudden you need this license. It could be restricted. You may get a license, you might not get a license. So this is really throwing everybody into a panic because they're trying to figure out, am I going to need a license? Of course you are. How am I going to get the license? And furthermore. But I thought this part was interesting as well. End uses of which are developed and fabricated logic semiconductors using advanced processes of 14 nanometer node or below, and memories with 256 layers or more. All right, just so we're clear on this, the license review policy will be case by case for items for the following. So that means we're going to decide if you get a license or you don't get a license. And just so we're clear, 14 nanometer node is literally really high. For those that don't know, when you're looking at something like a NVIDIA chip, your 2-3 nanometers is really where it's all supposed to be going that way to the 2 nanometer, but you're really low with Taiwan Semi, right? It's Taiwan Semi, for example, that allows them to do what they do. The smaller nanometers, there's not a lot of companies that can do that. The larger nanometer stuff is things that even go in calculators or go into automobiles. So it's really important to understand how broad this is. A lot of people would look at 14 nanometer and not have a clue what it is. But if you go and Google what is 14 nanometer down, you'll see that there could be something as simplistic as, oh yeah, we can't sell you a calculator anymore. That's how aggressive this was. And so it's really important to get that, and then why the reaction. I'm not saying one reaction is better than another, but it's understanding what's happening here so that we can figure out what stocks are going to move on it or which countries are going to come in or rally as this either escalates or de-escalates. And we'll get to that. End uses which are producing semiconductor manufacturing or testing equipment, as well as raw materials used for the above semiconductors. All right, so any semiconductor manufacturing equipment now, you need a new license for. Any testing equipment, you need a new license for. Anything that has any raw materials used for any of the above, you need a new license for. Any end uses which are for developing artificial intelligence, you need a new license for. They put in for military end use. Doesn't really matter. Everything else is pretty much up here already because there's nothing here that is really going to fall into 3 that's not in 1. Now, I did put in that link in the front, the caption in the front, so that you can go and Google this yourself. But I'm never going to sit here and go through this entire document because it would take hours. But what I want to show you is just so you can see, here's some of what they're talking about, things like cobalt or any of these. I'm not going to pronounce them all, guys, but I want you to just take a look at what they're actually doing so that you can see it for yourself. And I think that that's super important for people to get, right? Because once you say it, you can't really unsay it. You know what they're trying to do now. Some people will know this stuff better than others. But now you can see why these corporations that are in raw materials in the US or in other countries are actually rallying. So the quick summary, China curbs export of 5 new rare earth elements. New rules comes weeks ahead of Trump Z meeting. Foreign producers who use Chinese tech materials are required to comply. Foreign producers who use China-tech material required to comply. Foreign semiconductor users will face more scrutiny. So who gets hurt by this the most? Hands down, it's obviously going to be semiconductors, but this really puts the EU in a really tough spot. This article highlighted one key piece I just want to point out. The world's largest rare earth producers also added dozens of pieces of refining technology to its control list and announced rules that require compliance from foreign earth producers who use Chinese materials. Not only do you have to license for our rare earth, but the fact that you're going and getting your own rare earth materials, yeah, that equipment that you're buying from us, now you need a license. Now we don't even want you mining in your own country. I just want you to understand, and that's why I'm really hammering it home, how aggressive this was. And we're going to discuss why it may be becoming this aggressive. Now, without getting all into it, it's really important to understand that Germany, when they saw this and they read this, had, I'm not going to say freaked out, but had a very strong reaction to it. Because essentially, one of their greatest exports is cars. So this essentially is going to be very hard for them with VW, Porsche, Audi, all these car companies that are under that umbrella. It is going to be very hard for them to produce the way that they are producing. They're going to have to keep getting licenses, told when they can get the parts, not get the parts. And this falls on every country for going along with a global supply chain. I'm not saying to become nationalist, but when you rely on somebody as a partner, they have the ability to dictate terms. People seem absolutely confused by this, which is absolutely fascinating. I'm not going to get off like on the soapbox, but you just watch what's been going on with natural gas for about 5-6 years now. It's kind of crazy that they didn't see this coming or put in any kind of second level of defense. I guess we did go off on a little bit of a tangent there, but it is what it is. It's just mind-boggling to me. So if we take a look at how this is playing out, Germany said China is increasing restrictions of exports to technologies of great concern. Yeah, I bet it is. It can shut down your GDP or significantly throw you into a recession. If they limit what you're getting, you have a problem. You are reliant on them. And it's just mind-boggling to me that these people don't get it. And if they do get it, why they didn't think about having a backup for it. It's too soon to assess the impact of the latest curbs. The issue is now being discussed by both national and EU level. Economic Ministry sent an email response to Bloomberg's questions. And do you think China knows that they were going to do this? To an extent, I think so. But what did Germany do? Germany called the US. It's very clear what happened here. It's very clear how this whole thing chained out. And it's very clear why, we, instead of getting I don't know why we're getting not a public, conversation, but why we're getting tweets, but whatever. We can talk about that later. Europe is caught in the middle of a tense trade negotiation between the US and China ahead of a high stakes meeting. No, Europe is caught because they're being squeezed by one of their people that they need product from. And to sit there and say that, it's because of the US is ridiculous. They signed agreements to get things. Those things are now being squeezed. Unless you obey, you're not getting the things. It has nothing to do with the US. And I think that this is something that people are missing out on. And why am I trying to make this distinction? I'll be really clear about why I'm trying to make it. Because when this unwinds, and it always unwinds. It could contract, but then it will unwind again, right? You'll come to terms, and it could take longer, shorter. There's levels to it, but it will unwind at some point. Europe, for all intensive purposes, has to put itself in a better position. And if it doesn't put itself in a better position, this is why I'm bringing up the point, the money will come out of Europe again and go back into the US because they will understand that Europe is at more risk yet again. And Europe is already having issues with what's going on in France right now. It's really important to get that concept, guys. I actually think that this can really disrupt Europe and the EU. It's my belief that I think in 3 to 5 years, you actually may see a major country leave the EU. Well, I guess we did go off on a tangent. All right, let's bring it back. Sweeping new restrictions on rare earth. And guys, I do these raw and unedited, and that's just the way I'm going to do them. China moved to see reaction on Washington's export regime, which bans Chinese companies from accessing much of the cutting-edge technology made by the U.S. The German economy minister is close contact with company officials and speaking to the Europe Commission and other European partners. The aim is to achieve a coordinated European approach, the spokesman said in the thing. German government goal is to increase reallocation steps and raw material extraction and process back to Europe economic area. All right, so the German government's goal is to increasingly reallocate steps and raw material extraction and processing to the European economic area. So what they're realizing here is that they have an issue. So they're doing the right thing, right? They're saying, yeah, this is getting ridiculous. Every time we turn around, it's something else. Here we go again. So you can blame the US, China, but the bottom line is China doesn't have to do this to Europe. China could just say, we're going to do this with the US, right? They could do, there's a myriad of things they could do. That's not what they're doing. They're taking a very hard line stance here. And I don't think that everybody fully gets this. And I think a lot of it has to do with just the headlines. They see Trump coming out saying 100% tariffs. I'm not saying it's good or bad, but you have to understand the nuance. Because if you understand what's really going on, then you can profit from it when it actually starts to unwind. And of course, then we get the tweets or the truths, whatever. It's kind of weird that you have to say truth, so we're going to call them tweets. I just think it's better. Some very strange things are happening in China. Thank you, Captain Obvious. They are becoming very hostile, sending letters to countries throughout the world. Yes, they are. And export controls. Yes, they do. Rare earths, virtually anything else they can think of. Yes, it's super aggressive. So far with this tweet, there's nothing in there that is hyperbole. Just so we're clear, we just went through it. Nobody has ever seen anything like this. I don't know if that's the case. I'm sure we had this happen before. Make life difficult for every country. It does. It makes life very difficult for every country because you're beholden to China to make sure that you get the parts you need to make your cars. Just think about that for a second. They literally can say, we're not giving you a license, we're giving you a license. So, I don't know, maybe go back to manuals. Trade hostility came out of nowhere. I don't know that it came out of nowhere. We're going to get to that. I think there's a reason why this may have happened. And I'm going to speculate. Not tinfoil hat speculate, but we're going to speculate a little bit here. Our relationship with China over the past 6 months has been good. Everybody thought so as well. We kind of were moving forward. I wonder what happened. That's me adding, paraphrasing. There is no way China should be allowed to hold the world captive. They're materials. They can do whatever they want. I think that this is the part that everybody doesn't get about sovereign nations. They can do whatever they want. It just means that there might be consequences to that, right? So their minerals, their rare earth, they don't want to share it. They want to put controls in. They can do whatever they want, right? It just it affects the global supply chain, but that doesn't mean they can't do it, right? It just means that maybe they shouldn't have been added in if we ever look at what happened when they got into the World Trade Organization, but we can do that another time. A rather sinister and hostile move. I don't know. Seems like hyperbole. It is. It's aggressive, but the U.S. has a monopoly position. Yes, right. I've chosen not to use them. I think what's interesting about this is the bottom line of that. I have not spoken to President Xi because there was no reason to do so. And the question really is, why would you even put that in there? I think that's pretty telling. So what are the actions that we learned and what happened with our another tweet? Based on the facts, China has taken an unprecedented position, speaking only for the USA and not for other nations who were similarly threatened or sooner, depending on further actions or changes. The U.S. imposed 100% tariff. Any tariff currently paying on November 1st will impose export controls on any and all critical software. All right. It's impossible to believe that China would have taken such an action, but they have. And the rest is history. Thank you for your attention to this matter. Here's the thing about it. It was a very aggressive move by China, period. End of story. So the question is, why now? And I want to state this before we go any further. This is unverified. We don't know that it's happened. It's happened in the past, and we found out like a week or two later. They're going through their big meetings in year end right now in China. And what is coming up is that he may have had a stroke. President Xi may have suffered a stroke and is in critical condition. There are some sources to this, but the gentleman has had, this would be his third. And I think that people have called like 7 of them. So whether or not it's truly happened or not happened, at the time of recording this, we don't know. But this hit the tape yesterday and unverified through trading desks and things like that. So I don't know that this is valid. And quite frankly, we're not going to know until we know. But it's definitely out there. Now, this is what we know, and it's unverified. You can go and read it yourself. It's on several different articles that are out there, but I'm just going to paraphrase this one because it kind of puts it all together. So there's an insider with the Communist Party that disclosed that there's a sudden stroke earlier today. His conditions to be extremely critical. Medical treatment reported progress. This is all unverified. It's all from one source. We don't even know if it's fake news. We don't know, but it is out there. And I think that it fits kind of the narrative of why now and why are they being so aggressive? Well, if you're getting a new leader in power, a lot of times when a new leader gets into power, what do they want to do? Or if there's uncertainty, what do? They get super aggressive and they start from a place of power. And that might be what we're seeing here. Whether this gentleman came back from North Korea or not, again, I'm not going to play detective with all of this. I don't want to go through it all. Observers are a clear indication. He may suggest that disease condition is not as serious as claimed. I don't know. I don't know what this guy's doing right now. And quite frankly, I don't think any of us do. But what I'm getting at here is if you connect the dots, out of nowhere, we get this from China. After China does that, you have a cascading effect where from China, if this is the case or not the case, what we're looking for is the reason why they got aggressive. Now, let's just say that this is true. All right. So then they get aggressive. They have someone else that comes into power. Let's say it's not true. They're still being aggressive, and we still are dealing with the same person in power. Either way, we're getting an aggressive stance, right? No matter which one of these two things is true. I'm bringing it up because if this is accurate, we have even more uncertainty. So let's go on the premise it's false. They're still being aggressive, way more aggressive than they've been. Let's say that it's true. They're being more aggressive, and now we have even more variables to worry about. Either way, it is what it is, but you have two diverting areas there. One leads to uncertainty and one leads to more uncertainty. And then we have the actions of the EU in coordination with the US. And now we can see how all this is connected. Super important to get this, guys, because it's going to be a major theme, and it's one of the reasons why what happened on Friday accelerated into the close, and you did not really see any kind of rally. What's super interesting about this is what is transpiring. So in front of us are A shares, and they are the A shares of China. Now, you will remember that China goes through a period where they close for a period of time and then reopen. And that period is during it's either the new year or there's a reason for it. And I'm not going to butcher it, but there's a reason behind it. And I just want to point out that this was in 2024, October 7th, and that peaked. And here we are again. And I want to just get this out there. Whether or not he did have a stroke or didn't have a stroke, really important. You have either uncertainty and aggression, or you have massive uncertainty and aggression, right? There's no scenario where you're going to get a just kidding note, right? And that's where I'm going with this. So if you think that the US and the rest of the world is not going to retaliate, it's going to be a problem. And I think that that really comes from the position of understanding what happens now and how does this shift. And let's just say that he's not. Well, then you're going to go back and we might be dealing with other things that we have to worry about. But where do we profit from this? And I'm just going to leave this at there. Names like BABA, names like BIDU, they will get absolutely unequivocally smoked on this. Like this is nothing compared to what will happen. Now, why am I saying that? And why is this so important? It's really important to understand why they'll get smoked, because you're going to have a point where people are going to have had it, right? They're going to hit a point with this where it's like, you know what? We've just had it. We don't need the ag anymore. This is the second time that this has happened. We're just going to stay away from these names. And once that starts to happen, there's really no going back, and you're going to trade at a significant discount because of the uncertainty. That's what's so fascinating to me about this. Everything was going great for them. And it actually makes me wonder if it's true about the stroke, and you have a little bit of a power struggle there. And I'm leaning towards that. If you want to think where I'm at with it, or you don't care, I'm going to tell you anyway. I'm at 60-40 that the guy probably did have some kind of stroke or something happened. I'm leaning more than a coin toss right now. Not more than 60, but it's out there. I'm leaning that way because everything's been going great. Like since from an economic standpoint, you're killing it. Everybody wants to invest in your country. Everything's going great. And what are you doing? Now, the other thing that I think is super interesting about this, and we're going to go back to the A shares for a second. You can see right here on Thursday how we rallied and came down. They would know before we do that something's floating out there. And these are the A shares, right? And I think that's really interesting. Now, of course, we've been falling with the FXI already coming down. But I do find it interesting that you were down on Thursday. Now, there was no real reason to be down on Thursday, just like there was no real reason to be up on Thursday. But it does seem to me that when we look at what's going on in China right now, that out of nowhere, you just have this day on Thursday where all of a sudden you got a lot more selling. Now, is it because it's that time of the year again? You could argue that, but I find the timing super interesting because if you look at BABA, you don't really see it. If you look at BIDU, you don't really see it. But where do you see it across the board? You see it across the board in all large cap names. So it was broad-based selling. It wasn't just one name selling. Go take a look at the A shares. Again, isn't that interesting how on the 9th, all of a sudden you have this huge spike in volume? Well, why? Why do you have this huge spike in volume on the 9th out of nowhere? I just think it's interesting to me, and I want to point it out to you. So this is one of those things where, yeah, on the ground, they're going to know a lot more than we do, and they might not even know what's really going on as well. But I'm sure that if he did have a stroke, and again, the gentleman has had 2 of them already. This would be his 3rd. And I think we've reported 7 or 8 of them. When I say we, the world news. But if he did, you have to think about it. All right, he's going to go to a hospital. You're going to tell your neighbor, hey, this happened, or they're going to see it. And then you're going to act on it, go, man, this is uncertain. We better get out of the market, blah, blah, blah. And I find it fascinating that you're seeing it through the market as a whole versus seeing it in an individual name, especially the larger names. And I think that's super important. The other thing you always do is go just look at the financial companies, go look at like FUTU, and you'll note that you really didn't have the issue until that day, right? Even Tiger Global, and you go look at that one, which is a smaller guy, and you can see how that's playing out. So where does this lead us? Does this mean that you should be looking at yin? Does this, is that yin? Do you buy the bull one? Do you go on the other side of this? That's up to everybody what they want to do. What I would think happens here, what always happens with this stuff, is somewhere in the middle is the truth, right? It's just the way that it is. Here's Yang, and you can see what's transpiring here, where people are just like, just give me exposure to Yang and just give me exposure to this. I wouldn't do this like, I'll tell you how I did this over the weekend. I'll tell you at the end how I looked at playing this. I don't know more than you do. I just have the same information and I put it together and then I present it to you. And as always, everything's information, education, not financial advice. Make your own decisions. But do I want to be in there and then have some weekend agreement where they worked it out and over the weekend, which has happened before? And then I'm short China. And then you come into those 2 bro hugging over the weekend, which has happened before. So I really don't want to be short China. At the same point, I don't want to be long China and find out that the guy actually did have a stroke and there's an internal power struggle there. And they're trying to figure out who's in charge of the military. I mean, that just sounds like a suck salad. So for me, I tend to play the volatility side of it. And I'll show you how I position myself and just something for you to kind of pay attention to. And then we'll go from there. Super important to get this, but I do see another crack that's developing, and I do want to go through that as well. Now, I do put a lot of time into these. It's really important to me to get this out there. What I try to do with all these videos is I try to give you a glimpse of how institutions look at the world and then give retail an edge. I get asked a lot why I do these videos and why I put this stuff out there. That's why I'm doing it. I'm trying to show people what institutions actually look at. So I do appreciate you sharing these on social media. It means a lot to me. And so do your emails about how they have helped you. So I appreciate it. I want to go through this real quick. And I just want to give you, you guys can dig into this for yourself, but I want to tie it into a Saturday video so you have the time over the weekend. Tricolor files for bankruptcy, moves to liquidate. You can go and read all about this, but loans to people that should have not had loans. We've all heard this stuff before. There's millions and millions of cars out there that are going to be affected by this. And that's not an exaggeration. And all these dealerships that were once able to collateralize their loans and sell those loans to the street, guess what? If you're a fund and you're buying private credit, we're going to get into those words in a moment here. If you're a fund and you're out there buying private credit, or you're out there buying car loans and you just got tricolored, meaning your triple A's are now, they were at par, your triple A's are now 70 cents on the dollar. Just think about that suck salad for a moment. And think about the leverage on something like that. You are going to be so apprehensive to put on more risk. And that's going to affect other car dealers. And we're going to get to that now. But it's really important to get that it was the first thing in the private credit area that we've seen, the first domino to topple. Why I think this could be bigger is because no one's really paying that much attention to it. So when we're always paying attention to things like with the regional banking crisis 2 years ago, when we all know the thing's not an issue. When we're all not really looking at the thing, that thing has the chance to become a greater issue. The more we study something, the more we're aware of it. The less we know about it, the harder it can hit us, right? So I just want to point this out. You can go listen to this conference call if you want. That's up to you. You should choose what you're comfortable with. But I'm going to leave this in the middle sometimes for some of these videos because I get asked about it. Other times I'm going to pull it out. People are complaining they can't see these on their mobile phones. I'd rather have this up here because I think it's cleaner and it tells you what type of time frame the chart is and the symbol. But some people on their mobiles, you crazy kids with your mobile phones and your internets. So if we're looking right at what's going on here, you come out with earnings, it's a dumpster fire floating down the river, and now you're still rolling over. They talked about the lender having problems, how they're going to expand. Well, this happens right into Tricolor. Right after Tricolor, this starts to happen, KMX, and they start having problems. That's CarMax. Now, if we take a look at AutoNation, which we'll pull up here in a second, if we start looking at AutoNation, This one's just starting to crack. And is the consumer having issues? Now, this is where it gets super interesting to me. You have not broken the 55 yet. Remember, I used a 12, a 22, and a 55. But if KMX is having problems and these lenders, that the private credit lenders, which we're going to review in a sec here, if they're having problems, then how are these car manufacturers going to put it together? Also, if you take a look at some of the retail stuff, like Nike came out the other day and said, and you see where the 55 is, I use a 12, a 22, and a 55. You should use what you're comfortable with. But here's what's interesting. I'm like, when Nike came out and said that there's a problem with the consumer, I'm like, whatever, boomer. The problem with the consumer is that you guys can't get it together and there's an issue. Starbucks said the same thing. We're having a problem with the consumer. And they said it, back here, the consumer's not spending. Yeah, $14 for a latte that gives you diabetes. I got it. You're probably going to have to come out with something better as a product, right? That might not be the case. It might be the case that there's actually a problem with the consumer. So if we think about it and we really go back and look through it, I think it's an issue. I think it's a larger issue than I thought it was. And this is explaining why, they're not buying my jeans anymore. And we got stopped out of this, the Sydney Sweeney jeans, why we're having an issue there. And ANF, why I'm having an issue here. This is a long-term holding of mine. I've had things go well for me before. They don't look like this when they're going well. So what's starting to happen here is the consumers really seems to be having a problem. Now, where's that problem really going to stem the most from? Like, what is the need that most people have, right? When you really think about it, it might not be the fancy jeans, but you need a car. Like, unless you live in a major metropolis city, you need a car. So you're going to have to travel, you're going to have to go to work. That car is everything. And that is your big payment. And we know that they've extrapolated these cars out. Now, if you take this into account and you look at, like, say you have what's going on with China and the increase of what's going to happen because it'll be harder to get materials. So the cost of a car is going to go up, right? Okay, inflation. We can talk about that later. But what I don't want to do is conflate the issue. I don't want to conflate it with what's going on with the shutdown, inflation. I want to just focus on the issue. We could do that on another video. Why is this so important? Because you need a car. And so if you need a car and these loans start getting harder and harder to get, that means what else happens to those kinds of loans? If you need a loan and you can't get a loan, someone will always lend you money, but it just might be at a higher rate. But how is the car company going to package the loan to sell it to private creditors? And in here becomes the cycle, right? This is where I think the issue is. And this is where I think the issue could really fall into it. So on Friday, it started coming out that CVNA could have problems. Now, I had a long on CVNA, and what I did was, as soon as I saw the CarMax stuff, I got out of the way. As soon as it popped up into here, it couldn't get through this level, and we could see it. And I'll mark that level off for you. I really couldn't get through this level. And I believe that's like 390. I couldn't get through it. All right, so I get out. Pop, 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 right? Pop goes the weasel, weasel goes pop. Can't get out of it. Can't break out of that little level. What do? We get out of the trade. We get out of the long. So now just disclosure, I'm short. I'm net short. We went net short on Friday because this news started leaking. And when it starts leaking, you can really profit from these like downward moves, even into the end of the day. And I'll clip those out really quickly and just show you what we did. So what I did was I staggered all my puts. And there's a reason why I did it this way. But I staggered the puts out to the earnings. But we're up considerably in this, so I don't mind showing it. Because if I'm at the same price, I tend to wait just because of the community. If we're looking at this, what was the play? Well, the play was to stagger them on what the best option strategies were. And I just go long, and then I usually sell calls behind it. And I tend to not put the selling of the calls out there because you need to understand what you're doing if you're going to be selling naked calls, candidly, or you're going to have a really, really bad day. But there's a lot of profit in that, especially when the IV's that high, implied volatility. So we can do a video on this. I did a couple videos that people never really got into or watched that deal with options. And I thought they were very well done, but for whatever reason, maybe it was the title, they just didn't catch on. I'll try to remember to link those at the end of these on some of these strategies that we've implemented. Anyway, if we look at something like CVNA and what's going on here, you can see the options that we're putting on and we're doing quite well with them. But this kind of drop to me is extremely telling. Now, the end of the day options, I was up 100% on them, and then we were up 2. At one point, we were up 300%, but I was live, so I didn't even post it. I just told everybody. Why am I getting into this? Because I don't think it's over. I don't think it's even started to what could happen here. And this in and of itself becomes the issue with private credit. Like, what is the thing here that's really going to throw us off? And what's the thing that we're not discussing? And what is the thing that has ballooned greater than anything else? Private credit. Well, what's private credit? You go and get a car loan. That car loan gets packaged. They package that car loan and they sell it to people. Well, who do they sell it to? They sell it to hedge funds. Are there any public companies that go out and buy this kind of stuff? There are. And I just want to be clear. I don't know for a fact if CVNA is going to have problems the way that CarMax did. I can't believe that they wouldn't have problems on some level, because the people that buy the paper are going to just got, whack-a-mole. Are you going to be hungry to go buy more, right? It just wouldn't make sense, right? You would want to put the brakes on and make sure everything's fine. So that's why, worst case, let's say everything is going great for CVNA. Car prices are going to become a problem. The consumer doesn't have money, as we just went through. That's starting to really become an issue, guys. It's becoming very clear. And they haven't even passed all the tariff costs on to the consumer yet. So this little canary in the coal mine starting, and I don't think people are fully grasping it yet. So it's something we have to monitor. But let's say everything's going great at CVNA. All right, you're still going to have trouble selling your loans. Why? Because Tricolor, everything was great there too. AAA is now 79 cents on the dollar. So that doesn't make you feel warm and fuzzy. All right, so let's just keep going and walk through this. So then you have CVNA and they package their loans. Well, who do they sell their loans to? All right, so the first one is Ally. Now, Ally does car loans, or used to do car loans, and I think now that they buy the car loans, someone can correct me if I'm wrong about this, but that's a black marabouzo at the top of a chart. Here's your 55-day moving average. We can see what happened there. And so what I would do, whether you are someone that likes to short or not, I would just simply monitor what happens with this group of names that I'm about to go through with you. And the reason for that is because these guys are going to show you if you're really having a problem. And to me, they're showing you that there's a problem out there. So if we look at something like a BX, Blackstone, they do a lot of private stuff, a lot of private credit stuff. And they do a lot of direct lending. And that direct lending that they do is about 20 to 25% of their business. I went through the 10Ks and the 10Qs, and that's what I try to tell people about this stuff. Like, I really dig into this stuff and try to understand it. But again, from this break over, you come all the way back here. Well, we broke. Now let's just do the simplest of things. Okay, there's the 12, the 22, the 55. That's what I use. You should use what you're comfortable with. That's the 200. Well, you just lost the last of the bulls. When you break the 200, that's my demarcation. You've lost them. When you break a 200, you need to get back over it. If you don't, you have a problem. And this is becoming a problem. So what I tend to do with things like Blackstone or any of these names that I say, like, hey, you're starting to have a real problem here. Get rid of that one and let's get rid of this one up here. What we want to do is just focus on, let's keep that back right there. What we want to do is just focus on this. Now, why? Why do we want to focus on this? What's so important about it? Well, institutionally, when I lose the institutions, that's just an outright sell. So if you shorted when you lost the institutions, right, you're 170 to 153, just off of that. Interestingly enough, when this started to happen, when did all these names crack that I'm going over? When was the first crack? And this is where it gets super interesting. The 24th. Well, why on the 24th? Glad you asked. This is what I do with my free time. If you go back and look at the 24th, what happened on the 24th? KMX came out with earnings. All these companies are buying those kinds of loans. So what happened here? Right? As my niece says, what happened? So what happens here is when this cracks, is you can see that, right? It's the same day. Well, that's interesting. How about Ally? There's the 24th. I wonder why we gapped down that day. Start going through all of them. Owl. Now, Blue Owl does this private equity kind of borrowing, but it also does a lot of private lending, like a lot of private lending. Like 63% of their revenues when I went through the 10Ks and the 10Qs this weekend were private lending. So I'm looking at this and going, well, surely this is done going down, right? Well, does this look like it's done going down? So if we were to pull this out and look at this left head right, anybody can see that head and shoulders if you ever read a technical book. I mean, you guys already saw that. You probably didn't even need me to waste the time or the 30 seconds to point it out, right? So what does that mean? Left head right. Okay, so if we break that, then what you're doing is you're taking the top of the head to the neckline and you're dropping it down and say that's a 43% drop. Remember, we take the percentages, not the price. Right? You always take the percentages, not the price. So where's that put you? Roughly about $8. All right. So then you go back and say, well, where's $8? And it takes you right back to where those lows are in October. And then what happened in there was that regional crisis. So this is actually setting up to come in pretty hard. in my opinion, if you break your neckline here. And they have a huge private equity business. And then you start looking at things like Ares. Ares is in the same industry. And from what I can see with Ares and all these names is the same exact thing. Here's this day on the 24th, 180 to 168. And you just start going through them and looking at them and saying, well, this doesn't make any sense, these big drops. Now, it makes perfect sense because they are the buyers. Now, if your stock price is doing this because you own these, are you running out to buy more? And I'll be really clear about Ares, because when I really dived into this, I couldn't get over it. And I'm about to get it out there. When I went through like all these 10Ks and the 10Qs, the percentage for Blackstone was like 20%. Al was like 63%. Ares, it's on. It's their whole business. So their whole business is tied to it. And what's even crazier about Ares is through the direct lending and through the private lending, they'll take equity stakes in companies. So not only are they doing it through the private lending, but they'll take the equity stake. And now if the equity stake in the private companies goes away because you're marking them to market, I mean, this could be a nightmare. This could be an absolute nightmare. It's been a long time since I wrote a research report. I used to do them just because, I don't know, I find it fun. Anyway, but I was really thinking about doing one on these because you can see, I can't even get off the ground. So I think this is I think this one's in a lot of trouble, but you should do what you're comfortable with. I would take a look at these and pay attention to this. And I think this is more important right now for me to have spent time doing this instead of saying, hey, look at NVIDIA, where can it go? Lower. Like, all this stuff can go lower. You're trading at a huge PE, right? And you're trading at the PE and the high PE because things were going great. If China starts slowing down the economy, right, then things are not going great because they're going to slow down the global economy by that move. Whether that's their intent or not their intent, I don't know. I'm not invited to those meetings, but it will slow it down. If the consumer is really in trouble, which it seems to be more so than what we thought, that is going to be another issue for the market. You can have a bifurcated market where the RKLB of the world are going to continue to go up. But when the inflows stop and the outflows start, they're going to get out of everything. And the one thing that I want to just explain here, everyone's like, well, last week you were positive. Yeah, it's called the stock market. It changes, right? It's dynamic. It's not static. You need to adapt with this stuff. You need to understand that everybody that's in and is fully invested, right? So that you have a lot of money that's pulling into this market. And this is going to segue into something else that's really important for me to go over with you guys. And you need to watch this because how bad could this get or what could get unwound? We're going to get to that. But it's not going to matter here. What they're going to do if it gets worse is they're going to lock everything in and then reset. And when they do that, it's awesome because then we get to go through the bones and we get to watch it all burn down. And then we get to go pick through it and figure out what we want. Whether that is the OKLOs of the world, LEU, they are just going to lock in profits. Whether it has anything to do with the consumer or not, the first rule of institutions and institutional sales, institutional trading, protect your capital, protect your capital. There's always another trade, but protect your capital. And that's what we're seeing here. I want to show you one last thing. In front of you is New York Stock Exchange margin debt. And I went back 20 years. Now, what we're looking at is an absolute number, meaning this is the absolute amount of money that is on margin right now. And I just want to be Captain Obvious with some things. Obviously, this amount of money is greater than any period in time. And that is absolutely a fact. What I think is important is that it's commensurate with the way that the market is moving. What this means is twofold. One, we all know corporate buybacks have slowed in October, meaning they come to it. It's actually the blackout period, right? We all know this. And what we're seeing here, you've broken out at the same time that you've broken out of the market. So it's commensurate with what's going on. So it's not out of pocket. But what we might want to be aware of is without October and the corporate buybacks out there and this level of margin, if this is to accelerate, then for this to come off and pull back to a level that you saw in the beginning or end of 2024 is not the end of the world. And that is a tremendous amount of money that could come out short term in the market. So please understand that. That's why I'm showing it. Not like it's an extreme thing. It's following perfectly. But with October and this amount of leverage to come back to like one little level when this updates, and it will update. And I think that this is really important. Please look at the timing of this, right? So I want to be clear. They only do this monthly and they haven't updated it yet. So please understand that. All right, so when we look at these dates, so I'm just showing you where we are, but I want you to look at the date as well. This is New York Stock Exchange margin as a percent of market cap. All right, so if we go back 15 years, which just seemed like the easiest thing to do, for the size of the market, are we overextended? No. So meaning the market has gone up much, much more than we are levered at this time. So this tells you two things. One, there's way more leverage that could be utilized over the long term that is being utilized right now. And I think that's very important for people to get. So we could absolutely 100% have more percent of margin utilized than we do right now. So we're not even at this 2.2 level, which was pretty much all the rage. And you can see when the 2.2 level dropped. And if you're wondering why it dropped here, which probably people are, very simply, all of a sudden we had Powell and he said, hey, zero interest rates are going to go away. And then what happened in here was what? Well, we had rate cuts. And so they increased. And then what happened here was rate what? They started hiking rates. And when they start hiking rates, people get off margin because they start looking at their statement going, I didn't know there was something called margin interest because you didn't have to worry about it for a decade. All right. That's why that happened. So if we were trying to figure this out versus without ZERP, it's really hard to figure out. But what I would say is looking at where you're at now, understanding and getting back to the 21, 22 level. Yeah, that might be something realistic, but there's a lot of dry powder here versus market cap right now. Now, if the market collapses, obviously that goes up in percentages, but it's pretty hard. And this is really what I think we should focus on because I think that this really is the issue. And again, I'm just taking 20 years and they update this monthly. You were down to almost the zero line and then you rallied back up. And what we were focusing on is how fast it moved. So for me, it's rate of change. And this is what I want to explain. Yes, there's more dry powder. And yes, it's commensurate with what's going on. But if we look at the percentage of growth year over year, and this is how they do it, they mark it monthly. And they take every year and they're marking it monthly, September, October, November, you get it. This is what stuck out to me. So the red line is when it's extreme. I'm not here to explain that the red line's extreme or not. That is the way that Sentiment Trader looks at it. It's their graph. That's not how I look at it. But what I would say is that if I go from April, when we got done all our liberation and winning, to where we are in May, what I have noticed coming across the board is that you were at that 10% level, and now you are at that 30, 35%. So what I'm getting at is from May on, you have a lot of people that are using margin. We could actually argue on the percentage of growth that if you take 10 and you look at, let's say, call it 35, or let's call it 30, right? You are 2x the growth rate on the amount of margin that you're using. So you're up 200 to 300%, depending upon how you want to mark where this is, on growth of margin debt between now and May. When that unwinds, that's where the risk is, that the growth unwinds. And that's what puts the market more at risk here. Really important concept to get, and I wanted to bring it to your attention. That's it.